G'day folks, Jim here from Orchard Forex. It is Wednesday the 3rd of June. I thought I'd do a quick midweek update because we've seen plenty of action on Monday and Tuesday with risk on mode being in full throttle at the moment. So it seemed like a wise idea just to have a look at where things stand and to see what we can expect for the rest of the week. We'll actually start by going to have a look at the trend table that I put out every day. And the overall theme is really one of US dollar weakness and yen weakness, at least in the currency pairs. And that's being led higher by a stronger Aussie, as you can see on all time frames, and Kiwi as well. Even sterling is making an attempt to push higher despite the Brexit woes. The yen is the US dollar is actually making gains against the yen. Safe haven demand is seeing a general clean out of long yen positions. And the euro also looks pretty healthy, although that's showing a little bit of bearish divergence in the hourly charts, which possibly gives us a buying opportunity as it happens. Elsewhere, as we look through these, oil looks particularly good, and the stock markets, although they're fairly neutral in the short term, they do seem to be showing further strength down the track in the dailies and weekly charts. The dollar index, as you can see, the US dollar does look heavy. On the crosses, once again, yen weakness, so we've got a stronger euro yen on all time frames, and the same applies to the Aussie. Sterling Aussie looks weak, and euro Aussie looks weak. So really, Aussie strength looks pretty good on most time frames ahead, including against Aussie Kiwi. And we're going to have a look at the charts for some of these and see what they show up. Now, if we start off here with a daily Aussie chart, we've come a long way, particularly in the last 2 or 3 days. But the daily charts point higher, the weekly charts point higher. Now, we do need to just be a little bit careful here. This trend line here goes back to 2012. So this is a weekly Aussie chart, and we're running into FIBO. Well, we've actually broken above the FIBO resistance here, really, but we are running into this blue line, which is following the trend line down. That's the 100-week moving average. So there's going to be resistance above 69, 69.20, and we have got the Q1 GDP coming up in a couple of hours' time. If the GDP is at 0 or above, then I think we'll go straight through this. Otherwise, if it comes in as expected at about minus 0.3 for the first quarter, then we might drift off a little bit, given that the second quarter reading is undoubtedly going to be in the negative. So that would signal a recession, a technical recession at least, and that might take some of the wind out of the sails. But for the time being, the Aussie, going back to the daily charts, does look pretty positive, and the 4-hour charts equally look positive. So I'm kind of thinking that whatever we do, we look to buy dips for the longer term trade. We'll have a quick look at the euro. Actually, we're going to have a look at yen before that, because the yen's interesting. This is the yen's a much shorter term trade, but as I pointed out on the video over the weekend, I thought we were building a reverse head and shoulders, and we've now, since then, we've broken up above the neckline at 180 and 3/4, or 108 and 3/4, I should say. The objective from the base to the neckline is up here at this red line at 110. So and let me just put this in the right place. That's the neckline, and this is the target. So we've still got plenty of room. I would be looking to buy dips back towards the neckline at around that 108. You certainly have a stop loss under, say, 107 3/4 or so, but looking for a push on to 110. The euro, just quickly, pretty choppy, but the daily charts do point higher. We're breaking above, or we're sitting right on this 61.8% FIBO. Let me blow that up a bit. Sitting right on the 61.8% FIBO, but we have been above it, and I suspect that we can make further gains. The indicators are generally pointing higher. On the 4-hour trade, they're not showing an awful lot of momentum either way, so maybe some choppy trade, but we've got the ECB meeting on Thursday, don't forget, and I wouldn't be surprised if that's euro positive or supportive at least, and so we could see a move to beyond 112. I'm looking for a run back to this 112.30 area, and then possibly up to sort of 113, but that's down the track, I think. Looking forward elsewhere, this is quite an interesting chart. This is a weekly Aussie Kiwi chart, and we're right up against some decent resistance here. The 108, 109, 108, 108 and a half area, I should say. But if we break through this and the weekly charts look positive, then I think we could see a run back towards 110, possibly higher. That shows where we are at the moment. Now the daily charts not that positive. They're showing a bit of bearish divergence actually, if anything. So it could be that we do chop around here for the next few days, but eventually I think we're going to take this out and we take a look at 109, 110. Elsewhere on the crosses, Aussie Yen's the one I've been following pretty closely for quite a while, because I saw this reverse head and shoulders way back here, whenever that was, in February or so, and it's really just this started. Sorry, no, early April. Yes, early April this started. So this is on the daily, but it's never been back below the neckline, and the measured objective is a long way up. So we're nearly there now. I think I'd be a little bit careful getting long up here, but the dailies point higher, the weeklies show looking slightly positive. So I think we can probably look up here towards this 100 week moving average, which is at 76. That kind of ties in with this high up here. That's sort of 76 and a half. So I think we're probably going to head up towards there, and then I think all bets are off on the cross. You know, if we see a turnaround in risk sentiment, this move is going to snuff out very quickly indeed, and the Aussie will retrace quite quickly. But for the time being, the Aussie does look okay. The same applies to Euro Yen, really. The Euro Yen charts look pretty positive. This is a bit of a messy chart, but the dailies look very positive, and the weeklies are well, they're not really doing an awful lot, but I think the yen weakness will follow through, and we probably see a move towards a 122.5, 123.5 over the next week or so. Moving forward to stocks and commodities, here we are with oil, and this is the thing I really like at the moment. I suspect this is a kind of reverse head and shoulders, and I think we're probably heading back towards, well, this 40-43 level to start off with. I think we possibly head up here. This white line here, which doesn't look important, actually is, and I think that'll see some serious selling resistance if we get there. We're a long way off yet. We're at $37, so we've got a while to go, but we need to fill in this gap. But if we go out to the weekly charts, you can see this is the amazing head and shoulders that we saw in oil, which with the measured objective, I mean, I saw it a long time ago and never really cottoned onto it, but it did take us basically down to zero on oil, and now we're seeing the retracement, and that neckline there is going to see serious selling resistance, along with the closing of the gap as we saw. But I do like it, as long as oil doesn't go really back below sort of $32 a barrel now. I think we head higher, so I'd be looking to buy dips with a stop loss. Where would I put my stop loss? Somewhere down around this level here, I suppose. That's a long way off now, 31. I'd probably have it sort of at 32. So look to buy in the 34, 35 area with a stop loss at around 32. The other thing, stock markets, of course, well, as long as risk on is the way to go, then this is going to slowly grind higher. The dailies look positive, the weeklies look very positive, and that's the same across the board. I've just quickly on the ASX as well, which I've been following. The ASX looks pretty good, coming into resistance up here around this sort of 59.80 level. That's on the weeklies, and also on the dailies. The 100-day moving average is around 59.50. But until we see otherwise, the dailies here still look positive. Until we see otherwise, you've got to go with the flow, stay with the trend, and maintain a risk on bias. So we'll leave it there for now. Like I say, go and have a look at the trend table every day. I update that every morning at about 9 o'clock. It might give you a bit of a helping hand. We also I also put some trade ideas below the trend table on the website. So if you want to check out what I'm thinking on a daily basis, go and just go to alteredforex.com. Okay, until we do another one of these, I'll speak to you soon, and enjoy your trading. Cheers.